Hi everybody, Kambria Rimer here with Mountain West Financial. I just wanted to touch bases a little bit on the CARES Act and the forbearance program and what we are currently seeing. So the CARES Act did offer servicers, so your mortgage servicer, some guidance when you do go into forbearance. And so a part of that guidance is that they are required to show that the account is in current status. So meaning when it reports to the creditors, it is required to be given like a 1 rating and not like a 9 rating, which is what happens when an account goes into collections or when the account gets charged off. But what we are seeing when we pull credit, and what probably should happen, is that the servicers are trying to give an accurate representation of what is happening. So what the CARES Act did not offer guidance on is that the servicers are allowed to notate in the file that the account is in forbearance. They are not required to necessarily document a payment history if no payments are being made. So what that means for you guys is that after basically that account goes inactive, meaning there's no payment history, there's nothing, it's just in forbearance. So how long before that will impact your credit, your FICOs? We aren't really exactly sure, but at some point it likely will impact that. The CARES Act does not guarantee any zero consequences for going into forbearance. It is just there to help you if you aren't able to make your payment so that your house does not go into foreclosure. They do not want to see, what happened in 2008 where foreclosures just skyrocketed. That greatly impacted our market. So basically now everybody's just eligible to go into forbearance. But it definitely will impact you, and it won't just potentially impact your credit, it will impact your ability, what you can do in the future with obtaining a mortgage. So government and agency programs absolutely require a mortgage history. If we see a mortgage on your credit report, we require to see that history. So if you were in forbearance and maybe you're not in forbearance anymore, we're going to need to go in and we're going to legally need to obtain that mortgage history to see that you made the payments. And that definitely would impact your qualification going forward, whether it's for a refinance, to sell your home and purchase another home. We just have not received a whole lot of guidance on that, but it absolutely will impact what you're able to do with the months going forward after your forbearance. And it will impact you for 12 months moving forward after your forbearance. So before you decide to do that, please reach out to a lender. Please reach out to your trusted broker, loan officer, whomever that may be, to get some guidance on how it will impact you. Obviously, if you absolutely cannot make your payment, that's what the program is there for. If you're wanting to just use the program because maybe you want to get caught up on other bills or whatever, that's not what the program is for, and you need to be aware that it will impact your qualification moving forward in the future if you need to do something with your mortgage, like taking some cash out of your equity in your home or whatever it is that you may need to do. So, or taking advantage of lower rates. I mean, rates are low, they're great. So if you're if your rate is in the 4% or higher, even in the high 3s, you may want to take that opportunity when you can, and you may not be able to if you entered into a forbearance agreement. So please feel free to reach out to me with any questions. Again, Kambria Rimer here with Mountain West, 909-730-8077. Take care. Talk to you soon. Bye-bye.